Alright guys, it is the 17th of March 2025. I'm going to go over trades for today. The first one, definitely not an A+ setup, but it could be taken. Personally I didn't. Alrighty, so we have here is that previous 15-minute range. That is what this is, from 0 to 1. Go back at your charts, look at this. I'm not going to flip over to the 15. And this right down here is a 15-minute imbalance. Both of these are. This is NASDAQ. This is the S&P 500. So NQ and ES is what we were looking at here. This is a 1-minute chart. So you can see here at 7:57 a.m. These times will all be in Central Time. You see right here we have a close below the previous 15-minute range. Preceding that close below, we had these two candles that closed green and came up into this small imbalance. So whenever this closes below after taking this, we will target this 50% line right here. This 50% is projected from the previous range. So from 0 to 0.5 is the same from 0 to this negative 0.5. It's just a projection, mathematically based. So the risk to reward on this wasn't great either. It was 1 to 1, which the way I trade scalping and high win rates, that's fine. But again, I didn't take this. You would have had to have let it come up here and basically had top ticket here to be able to get your 1 to 1 ratio here at this 50%. But that's the first one. And another reason why I didn't like this is because it is coming down into this imbalance on the 15-minute, which is a bullish imbalance. And so I don't really like taking bearish trades in that scenario. You can, and they do work a lot of the times, but not this high percentage as I would normally like to see. So that's your first trade of the day. Alright, so this is the second trade of the day. This one I actually did take, and this is just about one of the best trades you can take. This is one of my favorite setups. So you can see right here, both of these, we're still down in this 15-minute bullish pool of liquidity imbalance, supply demand, whatever you want to call this, fair value gap, whatever. But you can see how right before 8:30, right before equities open, you can see the time right down here at the bottom of my screen. We're bouncing off of that midpoint on S&P, on ES, and over here on NQ, we're bouncing off the very bottom of it. Okay, so this is already bullish, and I'm gonna show you just on the 15-minute kind of what we're looking at here. So this is us on the 15-minute right here. Move these, make those drawings to where you can't see them, so it's a little clearer. Okay, it's a little better here, right? Okay, so these are 15-minute bars. Now what I'm about to show you is, well, I guess it's not going to let me do that. Technical difficulties here. Let's hide all these drawings again. Okay, so look at this bar right here. So again, NQ over here, NASDAQ, ES over here. Okay, so these track together, but sometimes they're a little bit different, and that is kind of letting you know where it wants to go. So look at this bar and this bar on each of these. Look at this low, which is right there. Whatever that is, 556.31.50. Now look at this bar's low. Did this big green bar right here, did it take out that low there of that last 15-minute candle inside this bullish imbalance? No, it didn't. Now look over here. This one did. That is what should let you know. That's a big sign that you're about to get a big move to the upside. So let's throw the drawings back on there. Come back over to the 1 minute. Okay, so back to the 1 minute. So you can see it right here. See where you just took it out just a little bit down here at the bottom. And see these up here didn't. Yeah, so as soon as you see that, you're on high alert here. Alright? So this little block right here, you're going to want to enter right there. As soon as it passes right there, I'm going to put a stop buy order right there. As soon as I see it taking this low and this one doesn't look like it wants to, and we're inside of this bullish inefficiency, I'm putting a buy order right there. And stop goes below here. The first target is going to be this 3/4 of the way back up. It's a very short first target. You can have whatever rules you want to about where to take profits, how much profits to take, all that stuff. So you can figure that out on your own how you want to do it. But that's how I do it. I either move it to break even or take small profits right here. And then you start aiming for major highs. So like an intermediate term high on the 1 minute, you'd be looking at this one. And then this one right here. And then once you see it take off tearing like that, you can just start moving. What I normally do is I move my stop up. So I'll just start trailing my stop, move my stop up to the lows, or if you have an imbalance like this, breaks away from this high, I'll put it, around the middle of it, because I don't really want it to go back down further through the middle of it. And as it just keeps on going up, you'll have to figure out how you want to do that, whether you're more aggressive, whether you want it to catch the bigger runs, or if you're just going to be a scalper. I'm more of a scalper, so I keep my stops pretty tight. But this one, just absolutely beautiful trade. This divergence inside of a bullish imbalance like that is just perfect. So that's the second trade of the day. Alright, next trade of the day, it's the next 15-minute segment. So right at about 8:45 right here. You can see this is another just great trade. Beautiful. So you can see down here, we still have this never got filled up, these two bullish areas, the bullish imbalances down here. But we are pulled away from it far enough that I would expect and like to see a little bit of a reversal here. So we got another divergence, and hopefully y'all are starting to be able to see that these divergences are very powerful. So you see right here, we make this high at 8:41. Okay, that's the high for that 15-minute candle. So S&P, the ES over here, after that new 8:45 candle opens, it trades above that last candle. NQ does not, it's heavier. Alright. So, as soon as you see, since ES is the one that took liquidity, you want it to trade down below that level right there, the open of these series of candles that went and took this liquidity above here. So as soon as you see that, I always trade the NASDAQ. I don't trade the S&P. I just use the S&P for these divergences. and convergences whenever it's doing the same thing. So as soon as you see it trade below that, you can go short here, which was about the same time it hit the open of this candle. Okay, so you are going to short right there, right around in here. Stop goes above that swing high, and normally I would take it all the way down here, like I did on the previous trade, 3/4 of the way back through, since we did have a divergence. But since we have this imbalance down here, I am going to be looking for the top of this imbalance to be filled. And since you are still somewhat bullish with all these imbalances down here, you could possibly even take a partial right here at the 50% line. But partial 50% line, and you need to be all the way out by the time you get down here. So anyway, that's third trade. Very, very nice trade again. Alrighty, so another reversal here. Got this 15-minute imbalance. Same thing over here. We come below previous 15-minute. 15-minute range here. Come down. Now normally I wouldn't take this trade unless we got some kind of divergence here, which we did. It's not big, but you can see here we took this low. This one did not. NQ. NASDAQ, so as you can see, this one right here is the one that dipped down lower. It's the one that came down, took the monies. Okay, so whenever this candle passes through that point, that's where you want to buy. So it would have been right around in here. So that's somewhere around in there. And then that's going to be your first target. So you can see it didn't get up there. You're going to go below this low right here. You can see it didn't get all the way up here, but if you look over here at the S&P, this one did hit that 3/4 point. So if one of these hits it, you got to go ahead and close it out, because both of them may not hit. This one came about, like a tick away from it, but either way, I would have closed out on this candle right here, 1019 candle. So would have gotten that right there, which still, closing out there, it's still a 2.34 trade. So good trade. Alright, so this one right here is a continuation. So you can see over here, we're going to be looking at this candle right here, the 1015 candle. And you see the 10 a.m. candle right here closed in a hammer, so a green hammer. So we're expecting prices to go up here, so I would actually take a continuation off of this. Not a huge fan of continuations, but I will take them occasionally. If the previous candle was very bullish, which this one came down here, took liquidity, and then closed back above. So I'm thinking, that's pretty bullish right there. So I'm not really a huge fan of the risk to reward on this, though. I probably wouldn't have entered. I didn't take this trade just because I wanted it to get down around. I wanted at least like a 1.5, so I would have wanted to enter down here. But you can see this candle right here comes down here, grabs liquidity from this little void right here. Same thing with this one, this void right here on this candle. I'll do a little square there for you, right there. That one. Same thing over here. So as soon as you see it do that, and then you get a close above your previous range, you can enter right there. But if you enter up there, I mean, that's 0.8 risk to reward. That's dog shit. You don't want that. So I was looking for down here. I didn't get it, and then this didn't even reach my target of the 50%. But this one right here did, so you would have closed out as soon as this one hits, which would have been like right up in here. So that would have been a shitty trade. if I did take it, even if I would have taken it, you know, you could have gotten in at a 1-to-1 risk to reward, but then you wouldn't have even made that. So not a great trade. That's why I didn't take it. Alright, so yet another bullish trade here. So over here, S&P, we're still down in that same bullish imbalance down here. Alright, so we take it once right here. You know, we kind of start coming up a little bit. Close below. Now, normally, with this right here that you see, these two up close candles and a close below, I would short that. You know, see that as a shorting opportunity. But since we have this, we're in this bullish range right here, I'm not interested in shorting right here, especially with us sitting right here on this line. Now, maybe if we were up here and we had some room to run before we got to this midpoint, maybe. But I still don't even really, wouldn't want to do that. So what we do here is we're looking for higher prices. So again, this was, man, today was just gorgeous price action. It's so easy to trade. Want price to get above that line. As soon as it does, buy right there. So since whenever I have divergence, like whenever one takes the low but the other one doesn't, I normally look for 3/4 fill, because those moves are normally more powerful, and I'll even look for a full fill or beyond. But on these, where it's just, you know, in an imbalance and we're taking a reversal, I normally want to get out at the 50% line. I'm not going to get too deep into this. I just want to review trades right now. Maybe I'll get deeper into it at some point. But so right there, it's at 144, 146. That's close enough to 1.5 for me. And you could leave some to run, but as you can see here, this one didn't even make it to the 3/4 way. This one did, however. So as soon as you hit it on this candle right here, which is this one right here, you would have gotten a few more points out of it. 187, right? So good trade. Another one for the day. I don't know, Moss here for you. Alright, so we are at 1233. We close above on both NQ and ES. So this is mostly what you've been seeing are reversals. So this is a continuation. You can see we get a close above right here. And it leaves us this little area unfilled right there. And it does as well over here. Okay. So whichever one it is that closes above it, you want that to have, you know, you want it to be aggressive in its move above and close above. Now, you don't want it just kind of sitting there like, you know, how these are all wicky and, you know, overlapping and there's no gap. You know, like you can see this one right here just ran straight up and there's a gap there. So that's what you want to see it close above. See, so once you see that close above, your stop has to go down here. So we get out this fancy little deal right here. Come over here, we'll set that, set our target. So right there, even you could actually take it right there. You got a 169. You could take it right there as soon as that one closes. But if you're, you know, if you're wanting to get something like a 2, you know, you could take it down as whenever this candle starts coming down. Hell, if you tried to bottom wick that one, you're about a 3. So yeah. However you want to take your trade, whatever your risk to reward ratio is that you look for. Personally, with my win rate, which is pretty high because I don't like losing, I can keep a fairly low risk to reward ratio. I like it to be above 1, but I don't have to have these crazy 2, 3, 4 risk to reward ratios like a lot of people do. But a lot of those people take a lot more losses as well. But some people can do that, and they like to let theirs run and have these huge winners that make up for a bunch of losses. I prefer to never lose because that sucks and I don't like it. So that's just my way of doing things. Everybody's different. Other people make money doing it their way. So however you want to do it. But that was great trades. You can see it just keeps on going. You know, if you took some partials here, you just watch it keep on going. All right, real quick here, just another. Well, I screwed that up, didn't I? Another little continuation here. So again, it's the same thing we just saw. You get this close above. You have this gap right here. But you also have this gap right down here. So this is something that we haven't seen yet, I don't think. So here we got two of them, right? Come on. So you got that little one down there. And then you got this little one right here. Okay, so you can see how these are reacting off of here, but you can also see where this one right here, you know, like we would have put in the previous ones, we would have put our stop right there, it would have gotten hit. But whenever you have them in a row like this, one after the other, you have to move your stop down to the lowest point, which a lot of times means that you're not going to get your entry because it's so far down there. Because your stop is so far down there, and to get your risk to reward the way you want it, you know, a lot of times it doesn't come down far enough. But this one right here kind of played around here a lot. You might have had a stroke sitting here waiting on this thing to take off for all these minutes here. But it did, finally. Now this, it didn't come up here and hit this 1.5, but that wouldn't have been my target. So you see where I have my target set, this red line right here, this is a higher time frame high over here. So you see how this is a major high. It's a swing high on a 15-minute time frame. So highs, lows, and those liquidity imbalance pools. That's my points of interest that I look for. And this high right here, that's going to be my main target, because it doesn't need to get up here, because it just wants that liquidity that's sitting right above this high, which is exactly what it took. So just another little continuation for you there. All right, another continuation. Man, it just ran this afternoon. I mean, look at this, just beautiful. You had multiple chances to get in. If you got in down here, you could have just let that damn thing run all afternoon. It's beautiful. But here again, another 15-minute candle, another place you could have gotten in. Okay, so there's two ways you could have gotten into this. If you had a real low risk to reward that you wanted, you could have gotten in on the close of this candle right here. So see that close right there? That's going to be like a 1-to-1 risk to reward, because your stop's got to go right here. But since you see these candles right here, so this is again, you're seeing them take liquidity right here, and then you get a close. So whenever you get that, you could have taken that, but you know, I like to, come on, quit it. I like to get a little bit better than that, so I wait for it to come down. If I miss the move, I miss the move. There will be another one. As you can see here, I mean, shit, we got what, 10 today? Ridiculous. So you wait for it to come back down here. You know, your stop's down here, so it's clearly safe, and then boom, hit target. Beautiful.